Hello, everyone, and welcome back to 4 Quarters and 10K. I'm your host, Joseph Abraham. If you're new here, I'm just like many of you, an amateur investor, learning the ropes for about 10 years now. This podcast is all about diving deep into companies, trying to understand how they work, and digging into those important financial reports, the 10Qs and 10Ks, all in a way that's easy to grasp. Today, we're tackling a titan of the tech world, a company whose products you might even be using to listen to this podcast. Apple Inc., stock ticker AAPL. It's a company that's constantly in the headlines and one many investors are interested in. It's a company that has truly shaped how we live, work, and play. Now, Apple is a complex company, a behemoth really. So here's our game plan. Later in the episode, we absolutely will be getting into the financial details. We'll break down the numbers from their latest annual report, the 10K, and their most recent quarterly report, the 10Q, to see how the business is really performing financially. We'll look at the trends, the margins, the cash flow, all the good stuff. But first, and this is crucial, for maybe the next 20 minutes or so, we're going to focus on understanding Apple as a business. Forget the stock price for a moment. Forget the quarterly earnings beats or misses. What does Apple actually do? How did they get here? What makes them tick? We'll look at their history very briefly, how they actually make money, who their customers are, their competitive strengths, their moat as investors call it, the risks they face, and where they might be headed in the future. We'll try to keep the heavy numbers out of this first half. Think of it as building a solid foundation before we look at the financial blueprints. Ready? Let's dive into the world of Apple. All right, Apple. Where do you even begin? Founded way back in 1976, it started as Apple Computer Company. Most people know the legends: Steve Jobs, Steve Wozniak, the garage, the revolutionary Apple II personal computer. They had their initial success, then some very challenging times in the 80s and 90s, even famously parting ways with Steve Jobs for a while. But his return in the late 90s, that kicked off one of the most incredible corporate turnarounds in history. Think about the products that followed. The colorful iMac that saved the company, the iPod that completely changed how we listen to music, the iTunes store that legitimized digital music sales, the iPhone in 2007 which, well, it didn't just redefine the phone, it redefined computing and communication itself, the App Store that launched 1 million new businesses, the iPad creating the modern tablet market, the Apple Watch becoming the dominant smartwatch, AirPods making wireless earbuds ubiquitous. The list just goes on and on. They officially dropped computer from their name in 2007 to become Apple Inc., signaling that broader ambition beyond just Macs. It's a story of relentless innovation, obsessive focus on design and user experience, and building one of the most powerful brands the world has ever seen. So how does this tech behemoth actually make money today? It's really a tale of two cities, selling physical things, their products, and selling digital things and services, their services. Products. This is still the biggest chunk, the historical core of Apple. The iPhone remains the undisputed king, bringing in just over half, 51% of their total revenue in fiscal year 2024. It's the engine that drives so much else. Then you have the Mac line of personal computers, laptops like the incredibly popular MacBook Air and the powerful MacBook Pro, plus desktops like the sleek iMac and the professional-grade Mac Pro and Mac Studio. Macs accounted for about 8% of revenue in fiscal year 2024. Next is the iPad, the versatile tablet lineup, including the Pro, Air, Standard iPad, and Mini. That was about 7% of revenue in FY24. And finally, the wearables, home and accessories category. This is a bit of a catch-all, but includes some huge sellers like the Apple Watch and AirPods, plus Apple TV streaming boxes, HomePod speakers, Beats headphones, and various accessories. This category made up about 9% of revenue in FY24. So, hardware is clearly still vital. Services. But here's where things get really interesting for the future, folks. This segment has become incredibly important and is growing fast. We're talking about commissions from the App Store. Every time you buy an app or make an in-app purchase, Apple generally gets a cut. There's AppleCare warranties and support plans, iCloud storage subscriptions. Many people pay for extra storage beyond the free tier. Apple Music, competing with Spotify, Apple TV Plus, streaming service with their original shows and movies. Apple Pay transaction fees. Advertising revenue, mainly within the App Store search. And other subscription services like Apple Arcade for games, Apple Fitness Plus, and Apple News Plus. Services brought in a whopping $96.2 billion in fiscal 2024, making up 25% of total revenue. And crucially, services generally have much higher profit margins than hardware. Think about it. Selling an extra iCloud subscription costs Apple very little compared to building and shipping another iPhone. In FY24, the gross margin for services was nearly 74% compared to just over 37% for products. That difference is huge for overall profitability. Is Apple a good business? Well, Putting aside the stock for a moment and just looking at the business itself, from a qualitative perspective, it's hard to argue against it. They have phenomenal brand loyalty. Seriously, it's the envy of almost every company on Earth. People who buy Apple products tend to stick with Apple. Why? A huge reason is the ecosystem. If you have an iPhone, Mac, iPad, and watch, they just work together seamlessly. AirDrop files instantly, copy on your phone, and paste on your Mac. Unlock your Mac with your watch. It's incredibly convenient. Switching to a competitor means giving up that smooth integration, learning new systems, potentially rebuying apps or accessories, creating what economists call switching costs. It's just inconvenient and sometimes expensive to leave the Apple garden. The stickiness keeps customers locked in and coming back for more. How often do customers buy? For hardware like iPhones, people typically upgrade every few years, maybe 2, 3, 4 years, depending on the user and the innovation in new models. Mac and iPad cycles might be longer, maybe 4 to 6 years or more. But the key isn't just the upgrade cycle, it's that once they're in the ecosystem, they tend to stay. And importantly, with the rise of services, many customers are now paying Apple every single month for music, for iCloud storage, for TV, plus Point, for Arcade, maybe AppleCare. This recurring revenue is like gold for a business because it's much more predictable than relying solely on people buying a new device every few years. And remember that recent record for iPhone upgraders in Q1 2025? That shows people are still actively refreshing their hardware, keeping the cycle going. Can they raise prices? Pricing power? Absolutely, yes. Apple is a textbook example of a company with significant pricing power. They sell premium products positioned at the high end of the market, and their incredibly strong brand reputation, combined with that sticky ecosystem, allows them to command higher prices than many competitors. And get away with it. We often see new iPhones launch at similar or even slightly higher price points, and people still line up, figuratively or literally, to buy them. Their consistently high gross profit margins? Remember that 46.2% overall in fiscal year 2024? That is direct evidence of this pricing power in action. People are willing to pay the Apple tax, as some call it, for the design, the experience, the status, period, and the integration. How would Apple fare in a recession? This is always a key question for companies selling premium goods. It's a bit of a mixed picture. On one hand, logic says that expensive iPhones and Macs are discretionary purchases. In a tough economic downturn, people might delay buying that new $1,000 plus iPhone or a pricey Mac. We might see hardware sales dip, or at least flatten. However, there are counter-arguments. The services segment, as we discussed, could be much more resilient. Are you going to cancel your $5 a month iCloud storage plan that backs up all your photos if money gets tight? Maybe not. Apple Music? Maybe you cut back elsewhere first. Also, for many people, their smartphone is not really discretionary anymore. It's essential. And the sheer size of their existing customer base. Remember, over 2.35 billion active devices globally means there's a constant underlying demand for services and eventual upgrades, even if people stretch the timing a bit. Apple also showed remarkable resilience during the 2008 crisis and the 2022 inflation shock, recovering faster than the broader market. So, while not totally immune, The growing services business and the essential nature of their products offer a significant cushion. Who are Apple's customers? It's an incredibly broad church, really. They target consumers, period, small and mid-sized businesses, the education market, students, teachers, institutions, large enterprises, and government agencies. Demographically, they skew a bit younger, often the 18 to 45 range, and are very popular with teenagers. There's a slight lean towards female consumers. And yes, due to the premium pricing, they tend to be favored by individuals with middle to high income levels, and often higher education, people who value productivity, aesthetics, security, period, and maybe that bit of brand prestige. Geographically, it's truly global, but the Americas remain their largest single region by far. While the base is wide, there is concentration within those higher income developed market segments. That strength is great, but it also highlights the challenge and opportunity in making bigger inroads into more price-sensitive emerging markets. Let's quickly recap the key products and services again. Products: iPhone, Mac, iPad, Point, Apple Watch, AirPods, Apple TV, HomePod, Beats, Point, and now Apple Vision Pro. Services: App Store, iCloud, Apple Music, Apple TV Plus, Apple Care, Apple Pay, Apple Arcade, Fitness Plus, News Plus, advertising. It's a comprehensive portfolio. Where does Apple operate? We touched on this. They are everywhere. Headquarters in Cupertino, California. Manufacturing relies heavily on partners, historically concentrated in China, but now significantly diversifying into India, Vietnam, and other parts of Asia, plus some components and future investments in the US. They sell worldwide through their own stunning retail stores, over 535 of them now, and their online store, plus a vast network of third-party carriers, retailers, and wholesalers. Their financial results are broken down into 5 geographic segments: Americas, North and South; Europe, including India, Middle East, Africa; Greater China, Mainland, Hong Kong, Taiwan; Japan, and rest of Asia Pacific, including Australia. The Americas is the biggest revenue generator, followed by Europe. Let's talk about Apple's moat. What protects them? Think of a castle moat protecting it from invaders. An economic moat protects a company's profits from competitors. Apple has several, and they are wide and deep. Incredible brand strength. This is huge. The Apple brand evokes quality, innovation, simplicity, period, and even status for many. This translates directly into customer loyalty and that willingness to pay premium prices. It's one of the most valuable brands on the planet, period. Switching costs. The ecosystem. We keep coming back to this because it's so important. Once you own multiple Apple devices, use iCloud for your photos and backups, buy apps on the App Store, subscribe to Apple Music. Leaving becomes a real hassle. You lose the seamless integration, might need to repurchase software, transfer data. It's sticky. Think about things like iMessage even. For many users in certain regions, leaving iPhone means leaving key group chats. That's a powerful lock-in. Network effects. The most obvious example is the App Store. Millions of users attract millions of developers to build apps for iOS and iPadOS. The vast library of apps makes the iPhone and iPad more valuable to users, which attracts even more users, which then attracts even more developers. It's a virtuous cycle that's very hard for competitors to replicate at the same scale and quality. Is this moat widening? I'd argue yes, absolutely. The continued rapid growth of the services business deepens that ecosystem lock-in dramatically. Every new service, every subscription makes it harder to leave. And their massive investment in proprietary silicon, their M-series and A-series chips, and now the big push into artificial intelligence with Apple Intelligence. These are attempts to create further technological differentiation, making their moat even wider. So, where does future growth come from? Apple isn't resting on its laurels. There are several promising avenues. Services, services, services. This is probably the most important growth driver right now. They passed $100 billion in annual revenue run rate in fiscal year 2024, growing at double-digit rates. There's still room to grow subscriptions, potentially bundle services differently, like Apple One, expand into new service categories, and better monetize that enormous installed base. Think payments, advertising, maybe even more financial services. Wearables and home integration? The Apple Watch and AirPods are already huge successes. There's potential for new types of wearables, maybe smarter home devices beyond the HomePod and Apple TV, creating a more integrated, Apple-centric smart home. Rumors about smart displays persist. Emerging markets. This is key. While dominant in developed markets, Apple has relatively low market share in massive growing markets like India. They are investing heavily there, opening flagship stores, boosting local manufacturing, maybe tailoring products. As incomes rise in these regions, the potential is enormous. They hit an all-time revenue record in India in fiscal year 2024 and multiple quarterly records since. Other markets like Latin America, the Middle East, Southeast Asia also show strong growth. New technologies and product categories. This is where Apple's DNA shines. Their entry into augmented/virtual reality with Apple Vision Pro is a long-term bet on the future of computing. While expensive now, it shows their ambition. And the big one right now is artificial intelligence. Apple Intelligence, integrated deeply into their operating systems, powered by their own silicon, and focused on privacy, could be a major catalyst for upgrades and further ecosystem lock-in. They see it as a key opportunity. The long-rumored Apple Car, or Project Titan, is still out there as a potential, albeit speculative, game changer. Healthcare and wellness. Apple sees a big opportunity here. Health features on the Apple Watch, like ECG, fall detection, blood oxygen, temperature sensing, crash detection, and now sleep apnea notifications. And the new hearing health capabilities in AirPods Pro show their growing interest. They run health studies through their research app. This is a huge market, and Apple wants a piece of it. What about recent acquisitions and market entries? Apple doesn't usually make massive, splashy acquisitions. Instead, they tend to buy smaller companies for specific technology or talent. Acqui-hires. Recently, their focus has clearly been on artificial intelligence. In 2024, they bought Data Collab, an AI and data analytics firm, and Darwin AI, a Canadian startup making AI more efficient. These buys directly feed into the development of Apple Intelligence and making AI work effectively on the device, which is key to their privacy pitch. They also bought BIS Records, a classical music label, likely to boost Apple Music Classical, and Mira, an AR startup, supporting their Vision Pro efforts. These moves show Apple strategically plugging gaps and accelerating development in key areas. In terms of market entry, Vision Pro is the big new product category. They're also expanding services like Apple Search Ads into more countries like Brazil, Turkey, and Latin America, and continuing their physical retail expansion into growing markets like India, Malaysia, Saudi Arabia, and the UAE. Okay, but no company is bulletproof. What are the risks facing Apple? It's important to understand these too. Intense competition. This is always a factor. The smartphone market has strong Android players like Samsung and others, often competing aggressively on price. The PC market has entrenched Windows competitors. In China, local brands like Huawei are formidable rivals. Apple has to keep innovating just to stay ahead. Geopolitical risks and supply chain. Complexity. Apple's global supply chain, historically centered in China, is a marvel of efficiency, but also a vulnerability. US-China trade tensions, potential tariffs, COVID-like disruptions, or other geopolitical events could severely impact production. While they are actively diversifying manufacturing to India, Vietnam, and investing more in the US, this transition takes time and introduces its own complexities. They also rely on single or limited suppliers for critical components, making them susceptible to shortages or price hikes. Regulatory scrutiny. This is a big one right now. Apple is facing a wave of antitrust investigations and lawsuits around the globe. The EU's Digital Markets Act, DMA, has already forced changes to the App Store, iOS, and Safari in Europe, impacting their business model there. The U.S. Department of Justice filed a major antitrust lawsuit in 2024, alleging monopolization in the smartphone market. The Epic Games lawsuit over App Store policies continues. Regulators are looking closely at their control over the ecosystem, App Store fees, default settings, access for third-party developers, and even things like their search deal with Google. Negative outcomes, hefty fines, or being forced to make significant changes to how they operate the App Store or integrate their services could materially impact their profitability and competitive advantages. Dependence on iPhone. While services are growing, the iPhone still accounted for 51% of revenue in fiscal year 2024. If iPhone demand were to significantly slow down due to competition, market saturation, or a lack of compelling innovation, it would have an outsized impact on Apple's overall results. Innovation pressure and execution risk. Apple's brand is built on innovation. They face immense pressure to continually deliver groundbreaking new products and features that wow customers and justify those premium prices. A misstep on a major product launch, quality control issues, period, or failing to anticipate the next big technological shift could damage the brand and their financial performance. Introducing complex new tech, like AI, also carries risks of unexpected issues or not meeting user expectations. Macroeconomic headwinds. We talked about recession resilience, but a prolonged or severe global downturn would likely impact sales of high-end consumer electronics. Inflation could pressure consumer budgets. Rising interest rates could make financing device purchases more expensive. And as a global company, fluctuations in foreign exchange rates can significantly impact reported revenues and profits when translated back into US dollars. Apple frequently mentions FX headwinds or tailwinds on their earnings calls. Okay, let's switch gears again and put on those green eye shades for real this time. We're going to dig into Apple's recent financial performance, looking closely at their fiscal year 2024 annual report. That's the 10K, covering the full year ended September 28th, 2024, and their very latest quarterly report, the Q1 2025. 10Q, for the crucial holiday quarter ended December 28th, 2024. Quick reminder on key terms for anyone new to this. Revenue or net sales, total money coming in the door. Gross margin / gross profit, revenue minus the direct cost of goods sold, tells you how profitable the product services themselves are before other operating costs. We often look at this as a percentage of revenue. Operating expenses, OPEX, costs of running the business, R&D, selling, general and administrative, SG&A. Operating income, gross profit minus operating expenses, profit from the core business operations. Net income, or earnings - profit. The famous bottom line, profit after everything, including interest and taxes. EPS, earnings per share. Net income divided by the number of shares outstanding, a common way to track profitability on a per-share basis. YoY, year over year, super important for seeing trends, comparing results to the same period in the previous year. So let's start with the big picture. Fiscal year 2024, ended September 2024. Total revenue came in at $391 billion. That was up a modest 2% from fiscal 2023. So still growing, still absolutely massive scale, but definitely slower growth than the boom years before that. How did the different categories perform over the full year? iPhone revenue, $201.2 billion. Basically flat compared to 2023. The biggest piece of the business held steady, but didn't provide growth. Mac revenue, $30 billion, UP 2% year over year, a small rebound after a tougher 2023. iPad revenue, $26.7 billion, down 6% from 2023. This category faced some challenges during the year. Wearables, home and accessories, $37 billion, down 7% year over year. This includes Watch and AirPods, perhaps facing tougher comparisons or market saturation. Services revenue. Here's the bright spot, $96.2 billion, up a very strong 13% from 2023. This growth was driven primarily by advertising, the App Store, and cloud services. Services now make up a full quarter, 25%, of Apple's total revenue. Profitability. Gross margin. Overall, a very healthy 46.2%, which was a nice improvement from 44.1% in 2023. Why the improvement? Apple pointed to cost savings and, importantly, that mix shift towards higher margin services. Services gross margin for the year was nearly 74%, way higher than the product's gross margin of 37.2%. That shift really helps overall profitability. Operating expenses, OPEX, grew 5% to $57.5 billion. R&D spending was up 5% to $31.4 billion, driven by headcount increases, likely reflecting big investments in areas like AI and future products. SG&A also grew 5%. Operating income. Despite OPEX growth, the higher gross margin meant operating income rose 8% to $123.2 billion. Good efficiency there. Net income, bottom line, $93.7 billion. Now this was actually down 3% from 2023, but, and this is a big but, this was heavily impacted by a $10.2 billion one-time net tax charge related to that long-running European Commission state aid case involving taxes in Ireland. If you mentally add that back, net income would have shown healthy growth. EPS, diluted earnings, per share, came in at $6.08, slightly down from $6.13 in 2023, again reflecting that large tax charge. Cash flow and capital return. Apple remained a cash-generating machine. They produced $118.3 billion in cash from operations for the year. What did they do with it? They continued their massive capital return program, buying back $95 billion worth of their own stock and paying out $15.2 billion in dividends to shareholders. Okay, now let's zoom in on the most recent results. Q1 2025. The big holiday quarter ended December 28, 2024. Total revenue, $124.3 billion. This was up 4% compared to the same quarter last year and was an all-time record for any quarter in Apple's history. A very strong performance, beating expectations. How did the categories do in this crucial quarter? iPhone revenue, $69.1 billion, roughly flat year over year, down just 1%. So the biggest segment didn't grow much but held its ground during the key holiday season. Mac revenue, $9.0 billion, up a very strong 16% year over year. This was likely boosted by the new M4, MacBooks, iMac, and Mac Mini launched during the period. iPad revenue, $8.1 billion, also up strongly, plus 15% year over year, driven by good interest in the newer iPad Air and the updated iPad Mini. Wearables, home, and accessories, $11.7 billion, down slightly, minus 2% year over year, still facing tough comparisons to previous big launches like the Watch Ultra 2 last year. Services revenue, $26.3 billion, up 14% year over year, another all-time record. Services just keep powering ahead, driven by growth across advertising, App Store, and cloud. Profitability in Q1, gross margin, very strong at 46.9%, up a full percentage point from 45.9% in the year-ago quarter. Products margin was roughly flat at 39.3%, but services margin expanded significantly to an incredible 75.0%, driven by a favorable mix within services. Operating expenses, $15.4 billion, up 7% year over year, driven by higher headcount costs and infrastructure spending. Operating income, $42.8 billion, up a healthy 6% year over year. Net income, $36.3 billion, up 7% year over year, an all-time record profit for a single quarter. EPS, diluted, $2.40, up 10% year over year, also an all-time record. Great result for shareholders. Other key points from quarter one: installed base grew again to over 2.35 billion active devices worldwide. This ever-growing base is the foundation for future services growth. iPhone upgraders, as mentioned, hit an all-time record this quarter. This is a really positive sign, suggesting existing users are stepping up to buy new phones. Apple Intelligence. Buzz. Management explicitly noted that markets where Apple Intelligence features had launched, US, UK, Canada, Australia, etc. by December, showed stronger year-over-year performance for the iPhone 16 family than markets where it wasn't yet available. They also saw the iOS 18.1 update, with early AI features, adopted twice as fast as the previous year's 17.1 update. This suggests AI is generating interest and potentially driving some purchase decisions. China update. Revenue was down 11% year-over-year. But management stressed that more than half of that decline was due to reducing the inventory held by their sales partners, channel inventory, compared to the start of the quarter. They actually ended the quarter leaner on inventory in China than planned, because sales were a bit better than expected towards the end. A nationwide fiscal stimulus program covering electronics was announced in January, after this quarter ended, so its impact remains to be seen. Still a tough, competitive market. Emerging market strength. Contrasting with China, Apple saw continued momentum elsewhere. They set all-time revenue records in Latin America, the Middle East, and South Asia. And importantly, India set another December quarter record. This diversification is clearly helping. Cash flow and capital return, still strong. Operating cash flow was $29.9 billion, and that was after paying $11.9 billion related to that EU state aid tax ruling. They returned over $30 billion to shareholders just in Q1, with $23.3 billion in buybacks and $3.9 billion in dividends. So, wrapping up the financials, Apple remains a financial juggernaut. Fiscal 2024 showed modest top-line growth, heavily boosted by services, with profitability impacted by a one-off tax event. Q1 of 2025, however, came roaring back with record revenue and profits, driven by continued services strength and a rebound in Mac and iPad sales. iPhone held steady, while wearables remained a bit soft. The improving margins, especially in services, are impressive. China remains a challenge to watch closely, but strength in other emerging markets provides a counterbalance. And the early indicators around Apple Intelligence and the record number of iPhone upgraders, well, those are potentially very exciting signs, pointing towards future demand. So, that's our deep dive into Apple for today. What are the final takeaways? Apple remains a dominant force in tech, built on an incredibly powerful brand and an ecosystem that keeps customers incredibly loyal and sticky. They're successfully navigating a strategic shift towards services, which is boosting profit margins and adding predictable, recurring revenue streams. Financially, they are astoundingly strong, generating enormous profits and cash flow, allowing them to invest heavily in the future, especially AI, while returning vast sums to shareholders. Challenges definitely remain, navigating the fierce competition and complex market dynamics in China, facing down significant regulatory pressures worldwide, and managing the constant pressure to deliver game-changing innovation year after year. But the opportunities look equally vast. Continued services growth seems almost certain. Expansion in huge emerging markets like India is gaining traction. And there are big strategic bets on new technologies like spatial computing with Vision Pro, and most critically right now, artificial intelligence with Apple Intelligence. These could redefine the company yet again. The early signs suggest AI is resonating with users and could be a major catalyst for future upgrades. As always, please remember, I'm an amateur investor sharing my research and thoughts. This podcast is for informational purposes only and is not financial advice. Always do your own research and consult with a qualified financial professional before making any investment decisions. Seriously. Thank you so much for tuning into 4 Quarters and 10K. If you found this episode helpful, please do me a huge favor. Head over to our channel on YouTube, search for 4 Quarters and 10K, and hit that like button and subscribe. It really helps the channel grow and tells me you want more content like this.